First, welcome everyone to this webinar. This is actually a repeat of what we did 2 weeks ago. I understand some people couldn't attend it. And hopefully this time we can go through more details with everyone. And also we'll make it interactive. So anyone who has any questions, do not hesitate to type or ask. And we'll take breaks to take questions. First, I would like to thank all the OptionSlam members who support us for the last 10 plus years. Without your support, our project would not be as it today. And certainly the world has changed. With this virus, we stuck more and more at home. This actually gives us a kind of new opportunity to explore, for example, this Forex day trading. This is something I've been doing for many, many years, and it gave me the time to sit down and review what we did, and we come up with the trading system we try to introduce to everyone today. So I don't know how many of you actually know Forex trading in the past. So Forex trading is very different from options trading. And options trading is more focused on picking the right candidate, doing lots of research ahead of the time, running into statistics, historical statistics. And Forex trading doesn't have that many options. As a matter of fact, we only have about 6 major currency. If you count for majority of the Forex volume is actually towards US dollar, Euro, and Japanese yen. So we don't have that many choice. The problem here, what we're facing is very different because we're day trading. We treat ourselves as a swing trader. So as a swing trader, we have to understand our risk is very different from options trading. And I'm going to start my presentation to let everyone to think about it. So let's see, what is a good day trading system? So we always talk about day trading or swing trading. And what's so special with what we're going to introduce here? What's the difference between articles you read from the internet? And the most key point I want to introduce here is we try to treat our trading system as a board game. So by treating it as a board game, we never focus on any single trade. We treat our account as a whole board game, and we treat all trades like multiple trades all combining together. So in our trading plan, we actually always think about multiple trades ahead of the time, not just focus on the very next trade I'm going to place. And also a good day trading system should produce equal long and short signals, meaning in a training situation, the system should produce me enough trending signals along the trend. And in a non-trading situation, the system also should produce me some good entry signals. And it should cover different market conditions. You cannot tell me a system can only handle one situation, and in another situation it completely fail. So we need to find a good system which can easily to understand what situation we are facing and how to take advantage of each situation. And also a good system needs to help us to correct mistakes. So no matter how good the indicators or the scenarios are, we cannot make sure every single entry we make will be along the market, where the market moves. So sooner or later, we'll find some of the trades we're hitting into a trap, or we're actually losing money. So a good system should allow me to correct those mistakes. And also based on the last webinar, many people complained that in our trading, normally it's very difficult to know when to take profit. So a good day trading system should have a clear way of tell you to say, this is a time, let's get out of the game. So we do not want to always ask yourself, is this time, is it good time? And we want to have a clear definition, and everyone knows exactly what exactly need to do. And also because we're part-timer, right? So we want to create a system which part-timers can manage it. So we're not asking people to stare at the chart every single minute, because Forex trading is 724, almost 724. It starts from Sunday, 5 o'clock in the afternoon, running all the time until Friday afternoon, 5 o'clock. So if you want to watch it, yes, you can watch it. You can basically watch it every single minute. But is that manageable? I would say no. We still have a life, obviously. And the less actually you stare at the chart, the better the result will be. So let's think about some of the disclaimer I would like to run. So even though it's a good system, we have been using it for quite some years now, but we still want to say there's no guarantee of the profit of any system you have. I would say if people telling you their system guarantee 8%, 10% of the return every year, that has to be a scam. Just think about the term deposit, how much bank is offering right now, how much mutual fund is offering right now. So yes, there's some hedge fund can give you 40% return, 60% return, but there's no one can tell you it's guaranteed. So, and also Forex trading has a big risk because of volatility. And volatility actually is a good friend, because without volatile, we cannot make too much money. But volatility is also a double sword. If we do not manage the risk properly, it can easily crash our account. And then now the third part is I want to make a claim that we're talking more about trading philosophy. We talk a lot about trading philosophy. Trading philosophy to me is more important than technical. If you following us in the next few months or few years, see how we trade, how we set up our trades, and at the end you will see you don't have to follow technical analysis, but you need to follow how we think. And now the first thing we ask is, as a beginner, people always ask me, is this price going up or going down? Even stock market, people are asking, will it go up or go down? Do I long or do I short now? How do I close my losses here, and how do I take profit? Those are all questions people ask. But are those the right questions? I would say no. Because if you ask those questions at a given moment, that means first, you did not have a plan. And the second, you force yourself to make a decision on the spot, which we try to avoid. Because trading doesn't mean you have to make a decision in the minute on the live chart. You have to make that decision. And our philosophy, our thinking is very different. Our thinking is, where do I long? Where do I short? When do I long? When do I short? I have a plan ahead of the time, and I have a plan defined so I can easily to follow. So that's one of the philosophy we're trying to make it clear here. The second point I want to make is, take profit or cut loss is obviously is the art of trading, and many people have struggled with that. So by our trading philosophy, we actually define a board game. We do not call cut loss. So for us, Forex trading allow us to long and short at the same time. So technically speaking, I only look at the entry point. I do not look at exit point. So I'll explain that in the next few slides with everyone. And the one question also people ask me is how much you take fundamental analysis. So fundamental analysis is, for example, AI these days, artificial intelligence. People look at news, people look at the professor, people look at all the experts, what they say, and they try to analyze where the market goes. And to me, it's an area like for individual traders, very difficult to follow, because obviously we are not professionals. We do not have a team behind us to every day give me a report saying, hey, this is Oracle just announced earnings yesterday. What did they say? What did the CEO just analyze their company structure? So we don't have a team, obviously, to doing this behind us. And each one of us are individuals. And even the professionals, I really don't know if they can easily tell what's going on in the future. They can look back and tell you why that happened. But I really doubt a university economics professor can really tell you where the world is going. And the world is crazy, as everyone would know right now. So for example, I give you like this example is for Tulip. So Tulip bubble is the favorite example I always give to my webinar audience. Tulip bubble happened in Netherlands 100 years ago, probably, and a few hundred years ago, actually. So the tulip price went all the way up to $200. And the majority of the time, the tulip price stayed within $10. So if you are a fundamental trader, you think the price should stay at $10, and you keep shorting along the way, if your account is not deep enough, I'm pretty sure in the chart you see below, when the price keeps going up, you will bankrupt at one point. And also what happened in the oil price 2 months ago, when oil dipped suddenly all the way to below zero. And to many people, it's impossible, right? So how can oil price go all the way to negative? So if you think when oil is only 1 penny per barrel, you try to place a buy and you place 10,000 barrels. And you think the maximum you lose is maybe $10,000. No, actually, no. You will lose millions of dollars the next day when you wake up. So those things, like, what does it really tells me? It tells me sometimes we cannot really trust the common sense we have there. If the market is crazy, we have to be crazy with them. That's how we make money. So we react based on everyone else is doing. Everyone is buying, price is up, we buy. Everyone's selling, price goes down, we sell. We do not want to be the clever guy, try to revert the market, because first, we do not have that much money to control it. Second is there's no need for us to do that. We're not savers. Like we're not trying to change the market. And those people at the Wall Street normally do that, not us. So we as individuals, we just follow. We're just following what market is crazy about. Now let's talk about our system. And the basic setup. So I already mentioned we do not have any fundamental analysis. So all the trades are based on technical analysis of the price actions. And we use day chart and a 4-hour chart. There's a reason for us to go that is each day we only have 6 bars if we use 4-hour charts, because 4 times 6 is 24. So this means every day max, I only need to look at the chart 6 times. I do not want everyone to stare at the chart every single minute and get scared or excited about where the market is going. We do not need to do that. So 4-hour chart to me is a very powerful chart. It allows me to sleep, eat, doing regular life, and only looking at the chart a few times a day. Even 4-hour chart, I cannot look at every 6 bars because you still have to sleep. Depends on your time zone. Many people will miss the European market at 3 o'clock in the morning. And many people may miss the Asian market. So it really depends on where do you live. But the key point is we try to make sure we have a system we can manage. And also Forex trading doesn't require lots of capital. So you can just deposit $500 to start. But the key here is if you only deposit $500, you need to make sure every trade lot you place is very small. So you manage the risk. And we certainly have a topic in future, just talk about risk management. And over there, we'll explain how margin is calculated and how lot is calculated, how profit and the loss are calculated. And if you using a simple formula, basically $500, you just place 0.01. That's they call micro lot or mini lot. Depends on the broker. And that's the minimum we would go with that amount of money. Of course, the more money you deposit, it gives you more flexibility. You can try to follow some of our advanced technology, such as correlation trading. But minimum we need is $500. And the last point is we want to show you our system, how we cover trending and non-trending situations. Now, the concept we have, why we have day chart and why we have 4-hour chart. So many people actually look at the chart as one chart only. And not only they look at the chart itself, they look at where to enter, where to exit all in one chart. But we know most of the technical signals are delayed. And many times the signals can only tell you the past and it cannot tell you the future. So we try to avoid that situation, try to solve that situation by introduce this multi-time frame concept. So in the day chart, what we do is we just look at the situations we call direction chart. We identify what situation we are facing. Is this going up? Is this going down? Or is this ranging? Then we go to 4-hour chart, try to make a action on it. Whether we long or we short is based on the 4-hour chart. So that can give us a little bit ahead of the time, ahead of the game to place the order. And we also show you a technique on MT4 system where we can draw the day indicator into the 4-hour chart. So, and we will see normally the small time frame chart has to respect the bigger indicator. So we're going to show you if we draw the 10-day moving average, for example, on 4-hour chart, normally the price hitting the 10-day moving average will try to stop, and the people will try to fight over there. And we want to introduce, keep a simple system. So I know people have so many indicators in the world, like there's lots of powerful ones. We have a wave system, we have a MACD, but we try to make it simple, and we do not want to make our chart messed up with all the indicators. So here we mainly use 3 sets of indicators. One is the Heikin-Ashi. Heikin-Ashi is basically similar to Japanese candle, but it paints the color in a different way. So it tries to eliminate all the noises. Also, everyone should know what moving average is, just like an average. It's a trending indicator, but it's also an indicator lagging a lot. Also, we try to use the Bollinger Band. So Bollinger Band, the reason we use Bollinger Bands is the mathematics behind Bollinger Bands is opposite than moving average, because Bollinger Bands, you calculate the delta, and also using the statistics model, which we like a lot. So next, let me show you an example of the template which I draw. So this is a Euro versus USD daily chart. This is what we call a direction template. So we look at the daily chart to try to figure out what's going on. And over here, what do we see here? So first you see those red and blue bars. Those are not regular candle. So it's already redrawn by the Heikin-Ashi indicator. So after we draw using the Heikin-Ashi indicator, it eliminates lots of noise and make sure you see a bunch of group of red and a group of blue together. Now the next thing you see is the red solid line on this chart. So those lines, those exactly is Bollinger Bands. We use the standard parameter as 20. So we draw the bands on the daily, so the up band and the bottom band. However, we customize that indicator and we do not draw the middle band. We replace the middle band by a 10-day moving average, smooth actually, 10-day smooth moving average. And this line, I took it because I feel itself is a very common line used by many traders out there. It doesn't really matter which we choose, 10-day or 9-day or 11-day or 13-day. It doesn't really matter. To me, indicator is just like a rough measurement. We never do it precisely. For example, if you look at the band here, it hit the band. It will go up and go down. To me, it doesn't really matter. It just means hit the band. So now on the bottom of the frame, what you see here is we measure the width between up band and the bottom band. We call band width. And take a look at this chart. What does it tell you? So at the left, you see what we call is ranging. So ranging means price respect the Bollinger Band. It goes to the bottom of the band, then go to the top of the band, go to the bottom of the band, go to the top of the band, top of the band, bottom, top, bottom. Now we'll see is the width is relatively flat between the top and the bottom. Now if you look at the trending situation, obviously you see all the bars are red now and it's trending down. And here you can see the bandwidth start expanding. This is where we see a situation that we're turning into a ranging situation we're turning a ranging situation into a trending situation. And now in this setup, we can tell us in the majority of the chart, it only covers two scenarios. One is ranging, one is trending. And of course, sometimes it doesn't really follow those two. It's called, it's not ranging or not trending. People would ask, what do you do over there? And I'll say, you don't have to do anything. And in trading, majority of the time you're waiting anyways. So now let's look at the few examples. So this is a closer look at the trending situation. So look at the bands are expanding, and then you look at the hacking ashi. It goes blue is up, red is down, blue is up, red is down, blue is up, and the red down. And we did not use the Elliott wave system to define waves because sometimes we feel people may draw it differently, like different people draw it differently. So what we do here is we just call hacking ashi color change is a wave. So obviously you will see here from the red to blue is one wave. Then from the blue to red is another wave. So every time a wave complete in a trending situation, we see it goes higher and higher. Every wave higher and higher. And this is one of the character we want to define in a trending situation. And we want everyone to be very, to look at it very carefully because we want to make sure price action create a new high or new low in the strong trending situation. Now in a ranging situation, if you look at closely, this is 2018, not 2016 anymore, but take a look again. It just same thing. It just follow, hit the bottom of the band, go up, go down, go up. And when it's ranging, take a look at the 10-day moving average in the middle. And the price action tend to ignore those 10-day moving average, doesn't even respect, it just break up and down. And now this give us more thoughts, right? So how do we deal with those situations? And obviously the situation between trending and the ranging is opposite. In trending situation, technically we should buy along the way. In a ranging situation, we shouldn't. For example, when it hit the top of the band, we should short here. When it hit the bottom of the band, we should long here. So what is our plan? So our plan, our thinking is why we call hedging is our mind should always prepare both outcome of price actions. We should always prepare it can turn into a ranging situation into a trending situation or vice versa. And we want to make a plan for multiple trades. And we want to think about our next trade. It depends on the result of my existing trades. So for example, if I'm in a ranging situation, I already make a trade and suddenly we saw on the day chart, it's become trending now. So we need to make a plan. How do we offset our loss? How do we enter along the trend? So our winning hands will be more than our losing hands. And we call this is a board game. So a board game means you are the judge and you have two hands with you. Your left hand only focus on long, your right hand only focus on short. And they compete each other. And you set up a board game rule to manage both hands. For example, the hand is losing cannot overpower the hand which is winning. And all those rules are make sure at the end of the board game, you have one winner. I don't really care which hand wins because both are your own hands. No matter which hand win, you win at the end. The only time you lose is you didn't manage them properly. So you didn't think about hedging concept in a full balanced of a justified way to manage your hands. And now, if you really think about what's behind it, suddenly your mind is clear. If you're thinking you're left hand, all you need to focus on is where you can long. on a trending situation, where do you long? In a ranging situation, where do you long? And if you think you are the right hand, suddenly you only look at short entries, and when do you short, and which position do you short? And you don't have to make decisions against each other anymore, because each hand, they only look at their own game. And the brain, on the other hand, your whole body or your whole brain is just look at the results of your both hands and try to manage, say, oh, maybe it's time that I close the board game because I see a profit coming up. Now it sounds like easy, but let's look at the more details into this what we're doing here. So the concept here is keep it simple. I don't want to say, oh, we already talk about so many different things and people say, oh, I'm already confused. No. Let's keep it simple. Think about it. We only have two situations. Price can only go up or go down, right? And we only have two situations to deal with. One is trending, one is ranging. So trend is your best friend. And that's like, I mean, many people say that in the world. If you search this line, you probably come up in every single forum we discuss trades. So, and now I want to say, outside of the trend, everything else you have Bollinger Bands. And sometimes if it doesn't work, Bollinger Band or trend, nothing works, and you just don't trade. It's as simple as that. So now let's look at the trending setup. So we discussed a little bit of the trending characters. Bandwidth is expanding, price action moves along with the band edge, and each wave creates a new higher low, and the moving average, we treat moving average defense lines. So take a look at this example. This is actually the action chart now. People will see it's different from the daily chart we talked about before. In daily chart, we actually look at the directions. So we'll say, oh, this daily chart tell me we're trending down. Now I turn my focus into 4-hour chart. In this 4-hour chart, what I need to do is I need to find out where do I short, because I already know it's trending down, right, in the daily chart. So where do I short? So first, let's look at how we set up 4 hours. So in 4 hours, again, we said we draw the 10-day moving average here in the dotted line. And this technique is made available in MT4 platform. It allows you to draw a day indicator into a smaller time frame. Now, the red solid line, again, is a day indicator. This is a daily band. So take a look at the daily Bollinger Band, was very narrow at the left at the chart here. The green dotted line is actually 4-hour Bollinger Band. And 4-hour Bollinger Band, you'll see in a trending situation, the 4-hour bottom band and the daily bottom band are actually agree with each other moving down. In the meantime, the 4-hour top band and the 10-day moving average kind of agree to move down. And we look at the wave, and we call wave, every color changes a wave. And look at those waves. Every time the wave change, it's a new low. It creates a new low. So this is the perfect trending down example we're seeing here. And now this is another example of the British pound versus Japanese yen. And again, take a look. Every time you see a low in those darker line, it becomes lower and lower and lower. Now, in a trending situation, what's our action plan? Our action plan is we always want to move along with the trend. We do not want to against the trend. That's rule number one. I know many people, let's say you have a mutual fund retirement account. You have 401k in the United States. In Canada, we call RSP. And advisor always tell us, oh, don't worry about market trending down. You just need to buy average down. That's what they call. So every month you buy. At the end of the retirement, you still make lots of profit. That doesn't work in day trading. In day trading, we have to be very careful. We should move along the trend because we want to take advantage of the volatility in the price movement. And in a trending situation, as long as the trend continue, we only add to our positions. We never get out. And that's what we call try to capture a big trend. And when do we exit? We only look at the reverse pattern. And only if the other hand comes back saying, oh, hey, it's time for me to buy now. So now that's the only time when you take a look at the Bollinger and close all your trade. So take a look at this red arrow here. Why we think this is a good situation to short. So there's a couple of reasons for that. First, at this chart, obviously it's not clear the trending, but this is 4 hour. We assume on the day chart, you already made up your mind. Day chart clearly tell you the Bollinger is expanding and we're trending down. Now you go to 4 hours, you look at the position here, and this is 10-day moving average, and this is the 4-hour Bollinger Band. So if a color change here from blue to the red, and this is the area what we call a multiple defense all agree with each other, and it's a very weak signal, and to me it's a very good signal to go down to short. Now take a look at the next slide. It's again another example where you can short. The price goes down, bounce back, and now you try to attack. So this is a concept what we call is a conflict between small time frame versus big time frame. And we already know in the big time frame where we have a trending situation. Somehow in a smaller time frame, you see a reverse pattern, and you see people try to attack back. And this is a time you just wait. When you see things like this, perfect. You wait until the reverse happening, and then you attack when the reverse running at those defense lines, because those are at the position where other people will join you together to short the market. And take a look at again here. So this is another situation. Price retrace to the 10-day moving average. You short here, and it goes down. Retrace to the Bollinger Band, and again you short here. And those are the places we call technical bounce. But in a day chart, you rarely notice those bounce. On a day chart, the trend still continue. So those are the places you try to attack. Now think about in a trending situation, we have lots of indicators. And I want to make sure we all understand the way we make money is not because indicators. The way we make money is because price actions. The place you buy and the price you sell, the difference is where your profit is. So take a look at those indicators in a trending situation. On the top, again, I removed all our indicators. We just show you some of the candles. And now take a look at the 2 arrows down. If those indicators are very good indicators, of course, MACD is very common used. And this is what we call a divergence. So price moved from low to up, but MACD has a up to low divergence happening. And also on the stock, you see every time above 80, it's a sell signal. However, as you can see in a big trending situation, even they tell you it's overbought or MACD showing divergence, it doesn't really matter. And the price still going up. And our system try to eliminate those noise. Basically, in a trending situation, all we try to tell you is buy, buy, buy. Ignore everything else. The moment you see weakness, and I'll show you what weakness is, but try to think about do not run against the trend. That's our first philosophy. Now think about when do we actually see the weakness. So even any big trend, right? Trends normally happening maybe, I can see a trend sometimes 2 months keep going up, going down, or sometimes even 3-4 months. And majority of the time it's few weeks. But even few weeks, eventually it will stop. And the long or shorts will out of either the long will out of the power or out of money, or they try to take profit. And there are signs. So what we do is we respect the price actions. So price action is the key here. How do we know the trend ends? So in this situation, if you look at this, every time when a wave change, it create a new high, and move along the band. And suddenly it goes sideways. Look at the price, it goes sideways now. And now this is a new high, but this is not a new high with this wave. So to me, if we didn't get out at the red arrow here, we have to get out at the black arrow here. So this gives us two opportunities to get it out. All of my trades trading along this wave. So maybe I have a buy here, maybe I have a buy here. But all those buys, we come up along the trend, will have to be taken profit here or here. And then now not only we close the trade, an aggressive player can actually start to short at this black arrow here, because this is a first entry of, look, it didn't break the up, and the 4-hour Bollinger Bands going down, and the day Bollinger Bands continue to move up. It create a divergence on the band, and based on the price action, we actually make our call is try to short here. And we're hoping, or we're thinking in this situation, because trend just completed, it should become a ranging situation, and it should hit the bottom of the daily band. Now take a look at the reverse example of what we do here. This is obviously a strong downtrend on Euro USD all the way. And then now you see a bottom here created, also sideways. 4-hour band move sideways, daily band still going down. So on the smaller time frame, it cannot keep the pace. So when this happened, you see there's multiple waves here, like long and short try to fight it out. And eventually, because it cannot continue to go down to hit the daily band, it try to reverse and go up. And this is a time we try to tell everyone, do not take a chance. If you have any profit, you have a board game, close the board game and let's start a new one. That's when and where we take our profit and put profit back into our account. And so far we talk about trend, and we have 20 minutes left. That should be fine. So now we talk about Bollinger Band setup. So in the Bollinger Band setup, what that happened is, we know it's not a trending situation, and we know the trend has just finished. So when a trend is finished, not all the time, majority of the time, it doesn't start a fresh new trend. Majority of the time is it take a break, because long and short need to fight it out. There's still long players try to continue the trend, and the short players try not to let you to continue the trend. So when long and short start fighting, normally we see a ranging situation. This is when Bollinger Band come up into the play very nicely. So Bollinger Band is calculated based on the statistics analysis. So it says based on the delta, based on the volatility, there's a confidence zone. 99% of the time, the price should not hit the band edge, right? So in a fighting situation, perfect, because it shouldn't even break the edge. And take a look at this setup now. Now it's 4-hour, right? It was trending until now, and suddenly it stopped. So take a look at this. Those we saw weak signal. This high here is definitely lower than the previous high, and now we see the price is weakening. And now from the top of the band, it will hit bottom of the band eventually. So in this situation, what we recommend everyone to do is we short in this situation, and our target is here. And then now, because the trending, we didn't see a trending situation, because look at the Bollinger Band edge, it's still very flat. So whenever happening here, a reverse, we can close, because it reached our price target already. Take a look at the bands. So our trade plan with the bands is we try to trade off each edge of the band from top to bottom, bottom top, top to bottom, bottom top. And sometimes band can happen also month. Like I saw sometimes in Euro USD or Euro Japanese yen, it can happen 3-4 months time. And you just see price keep hitting top and bottom, bottom, top, top to bottom all the time. And if you only have one method to trade, and that's the time you feel lots of pain if your method doesn't fit into either trading or ranging. And take a look at the example now again. So In this situation, price hit the top of the band, revert right away. Band is flat, and we try to short here, and we try to see the price go top 10-day moving average and the top of the band stop and it goes down. And going down, the reason it changed the color here is a flip in the time to us to get out and to take the profit and to put that into our account. And also here is a time where you can actually sink a long entry here. Well, people may ask you, how do you know it's not trending now? Maybe you long here, it will continue to trend. You don't have to worry, because if it's a trending situation happens, think about our right hand. Our right hand is short, keep shorting. There's lots of opportunities happening up for the right hand. As long as you manage the lot properly, your winning hands will overpower your losing hands, because you only have one chance to long here. In a trending situation, you will not have another entry point of long, but you will find quite a few entry points for you to short. So the partial, because you compare number of hands you long versus number of hands you short, and let's say you have 3 short versus 1 long, then the profit you're making on the short side eventually will overpower the losing you have on the long side. And when that happens, your whole board game turning profit again. And that's the time you close all the board game and start a brand new one. So technically, that's the concept we're talking about. So again, this is an example of, look at the daily bands that are shrinking. And when you hit the bottom, this is respect. The price didn't stay at the edge. In a ranging situation, price will never stay at the edge. It just hit and start bounce off. And now you hit the top, you try to say, okay, this is, I'll take the profit here. And this is a situation you can actually see mixed. Once it fixed here, you will see the band start to expand it again. And you probably will see a long entry right here to help you long, because it's trending again. So I should long here now. And the hedge game allows you to be very flexible about how you pick your trades. And if a entry point coming up, if it's a long entry, you're long. If it's short entry, you're short. The only rule you want to prevent yourself doing is in a trending situation, you try to make a trade against the trend and keep averaging, adding it up. So if you say, oh, oops, I'm losing money, let's short more. I'm losing money, let's short more. This is more like in casino. Every time it hits the black, you say, oh, next time it has to be a red. And what about if it hit the black 13 consecutive times or 20 times in a row? It can happen. And then if you keep betting double your money, and you will lose all what you have. That's what we try to avoid. Once you avoid that, the rest technically is a simple board game to manage. So this is, we already talked about quite a few rules already. And we want to make sure the losing side lost his turn. Obviously, we do not want to build on the losing side. And the winning should keep playing. And we should restart the board game if the whole board is making money. And we want to tell you is we want to mix those two systems together. We want to have a hedging thinking, not just left versus right, also hedging between the trending situation versus the ranging situation. So you have both systems running at the same time. And before I look at the some real trades, we want to take the next 5 minutes, introduce our the app we built, which is the Growth 500. So one way beginners always say is, people ask me to create a paper account, and I can practice with paper account. Or I just practice with a real money account. So I don't like either way, because paper account, sometimes you don't care. You just trade with whatever you like. It doesn't really train you pretty well enough. On real account though, you may be running scared. What if you make mistakes? What if you didn't follow the rules and suddenly all your cash are gone and you lose confidence? So this is an app we actually create among our own group, and it's an app we try to say, okay, let's simulate the setup I'm using, And I try to use the setup and apply some real situations in the past, and let's see if I can make money or not. So I try to run the simulation here. For example, here I can easily see, okay, this is the daily chart, and this is the 4-hour chart. And then now you see the bands, you see the 10-day moving average, you see the daily bands. Now let's see how the price goes. So I kick start, and it will start move the bar automatically. This is the actual historical, based on historical price. So this reflects the exact situation you are facing. So for example, here you can say, oh, this is a time I probably can place a short here. What will happen here if I place a short here? Oh, now, oh, oops, it's trending down now, right? So band is expanding. I can see the price continue to move down. So think about it. On the day chart, it start to show you red and the red and the red become bear. So what do I do now, right? If I take a pause here, what do I do now? So on the day chart, I see it's trending down. So what do I do on the 4-hour chart? I wait until the 4-hour chart bounce back. So let's see. It doesn't matter. It has to bounce back. I mean, people will take profit, and long will try to enter the game when see a opportunity coming up. So now let's think about it. How do we short? So I will say aggressive trader is if you see a color change, technically you see a color change from blue to red, and you can try to see if you can short one and see what's going on. And if it's trending down, it should continue to trend down. This whole thing should continue to go down, go down, go down, go down, and have another wave, another wave, another wave. So this is how we try to practice ourselves along the way and see how many profits in different situations I can make. So I can also customize my practice. I can say I want to see USD, Canadian dollar. I want to, using the hedging mix template I have, I use the bandwidth. I can pick my time anytime in the past. Let's see how I do it, how it works, how the 4-hour chart showing up. So, oh, oops, look like this. This is the flat band. So what do I do here? When they hit the top, it's a ranging situation, right? So I should short here. And when I short here, let's see how it goes. So you can simulate all your activities using this app. And we also create a bunch of exercise library, which we look at all the history. We say, okay, maybe based on what we're teaching you, there is a trend start, continue ranging, and a hedging situation. And you can look at those situations and search all the exercise type we created and try to see, based on each type, you want to simulate to see if you can make money or not. For example, this is the pound versus yen in 2017. It has a trending start situation. So we can take a look at how it goes. How trends start from ranging. Where does it start? Obviously, it's ranging right now, right? So you hit start, let it run. So see how the situation change, and how, if you have a trend going down, how do you react based on the situation? So this is an app we create, and we love all the people to give a try. You don't need to subscribe to any paywall. There's lots of free examples and customization you can do. And tell us what you think, what you want to practice, and we would love to see people's feedbacks and make it better. So this is based on our own use, right? Now we want to open it up to all the members and let members to tell me what I need to build next. And also on this topic, we have also have an open challenge. So every couple of weeks, we'll refresh the open challenge, and we can discuss in our Facebook group. We'll discuss what's the situation we have in those open challenge and what do we do. And we can, the Facebook group is open for everyone to join. So we try to share the ideas, and we try to teach philosophy. So we have about 36 different topics we have in trading philosophy, and we can share articles, and then we can write them up, and then we can discuss with everyone together. So the goal here is we try to see if we can create a social group and we can make money together. So we're not competing with each other. There's no such thing in Forex. It's the volume is way too big for anyone to manipulate it. So we try to stay together as a team. So we different time zone, different culture, different character of the people can all share trade ideas together. That's the thing we try. That's the project we try to create here. And before I leave to question and answer, let me spend next few minutes to continue my presentation and talk about the some of the real example we just had happened last month. So this is happening in June with Australian dollar versus USD dollar. And in this example, you can clearly see it was trending up, right? You can see that even it's 4 hour. You can clearly see it stays with the edge, never go. Now suddenly 4 hour goes sideways. And if you are patient enough, you didn't find a good opportunity to join the trend. And now the first thing is, oh, it goes sideways. Now this is a weak signal here because it is supposed to hit the top of the band, daily band, continue to move along the daily band, but it didn't. It stopped by the 4 hour. And the 4 hour goes sideways means in a smaller time frame, the long kind of running out of strength. And now you can think about joining the short now. If you have anything long along the way, you should close all your long, start a brand new ball game and start short here. Now the thinking is, where do you think the long will attack back, right? Obviously the long will not attack here. This is not many profit they can take. I can see two entry point. One is at the bottom of the band and one is at 10-day moving average, because those places long has to defend. If they fail to guard those lines, then of course the short will make all the way goes to hit the bottom. And you will see in between June and July, now we are July 1st now, how many times long actually defend this 10-day moving average. And we'll see next. Now, if you short, let's assume I shorted here. And take a look, the defense at the 4 hour bottom band doesn't even exist. So 4 hour also expanded. Now 4 hour created a trending situation and all the way goes down to the 10-day moving average. Now you think this is the last straw the long has, right? The long has to defend here. There's no way a long trader will let the price just continue to have a free fall. Obviously, as a short side, we love that. We would love that to happen, but you have to be realistic here. There's no way the price will, every time you place a trade, the price just go with your wish, go 1,000 points and you make a profit and double your capital. No, that will never happen. Those long trades has to defend here, and they actually will make an effort to defend. And first they defended here. It tried to push the price up, but it was short-lived. The price continued to go down. But the long will not give up. The long will defend here again and push the price down up again. And when that happened, we recommend we join the long now, because obviously the price below the 10-day moving average stayed with the 10-day moving average, has another wave change, and start to move up again. So this is the time we close the short, we join the long, because we are making profit. So we close the board game, we start a brand new board game. Now think about this. If the long failed here, if the price continued to go down, obviously this long position will be losing money, right? And don't worry about it, because if it continue to go down, your short side will find more entries with the wave change. Now, if it didn't go down though, your long entry here should make a profit. Minimum, it should hit the top of the Bollinger Bands, because that's where short love to attack again. Think about it, short will not attack here. Why they want to attack here? Short has the same philosophy, right? I want to see the price goes up, then attack. So to me, in this situation, if you're facing a live chart like this, you technically think, if I'm a short player, I will position my troop here. And my long player will place my troop here. And this is exactly what happened. So here you see it, the short attacked and hit it. and stop the long going break the uptrend. So you close the board game again, you're making profit. You close the board game again, it's a swing trade. And we are not in a training situation, right? We talk about only if we are in a training situation, you keep attacking. But here we're not in a training situation. So if you swing trades, you take profit and you swing based on the long and the short. Now there is a triangle set up. So long and the short try to fight out. Whoever wins will win. And this is the situation in AU. It still continue fight today, even right now. I think today long kind of showing signs of breaking up now. But between June 16th to now, long and the short has a big fight in this area. And now we look at the reverse entry. Think about the pound versus Japanese yen in May, what I did. So take a look at the situation here. Here, why we long here? Obviously, we price is moving up in the day trend. And then now here is a double confirmation. We already said from the bottom of the 4-hour plus a 10-day moving average, if it bounced up, it's an area we can actually long. And why this is another long? Because it's a wave change and it continued to go up. Why this is a short? Because this high didn't break the previous high, and a wave change here is technically a short position to close both longs and clear the board game and start a new one. So we look back and say, GJ, okay, again, let's say I close the board game, and here clearly another short position because long failed to break the 4-hour top, and look at the band, right? Band is flat, and I suppose the top band moved to the bottom band, and I short here. Hopefully my price will hit the bottom of the Bollinger band. And you'll see actually in live chart, it does hit the bottom band. So in majority of the situation, our system is good enough to handle. And now I do not want to get everyone too excited because when you look back, things are very, very easy. But when you look forward, things are definitely not as clear as what you were hoping things are. And then let's remember certain rules. We do not allocate too much money into every single trade. Remember again, our account is managed by multiple trades on multiple currencies, and the currency are correlated with each other. There's a lot of maneuver we can do. For example, when GU goes up, you actually short it. What do? You can actually cover by long EU. So hopefully EU will outpace GU and you have more profit than your loss. So those are all techniques we can use. And at the end, all you need to do is offset between profit and loss. Make sure your account keep growing up. That's what we try to do using that hedging philosophy. And we want to make sure you always have enough cash reserve. So there are two rules we want to teach everyone. One is at any given time, you do not force yourself to make a decision. Because people tend to be very nervous, look at the chart, say, oh, I make profit now, do I get out? Oh, I'm losing now, what do I do? No, that's not, you don't have to. If you manage your account properly, you never run into a situation you have to make a move. However, we also want to say, you have enough cash. If an entry coming up, you always have cash to make a move. That's on the other side. So you cannot say, oh, I'm running out of all my margin now. I see a very good opportunity, but I cannot acting on it. That's a wrong move too. You should always have enough cash reserve to participate. If an entry coming up, I have enough cash to enter. So in the board game, I never run out of moves. I always have my left hand have enough resource. My right hand also have enough resource. They just compete each other, try to create a winner. That's the whole situation or whole system we try to teach here. And the last point I want to make sure is let trade run. So we are trading 4 hours, right? And a 4-hour chart doesn't change every minute or every 15 minutes or every hour. So don't look at the chart that often. It won't change. You already make a trade. Let the trade run. Don't panic. It will be okay. Even if you're wrong, it will still be okay. Just don't worry about it. And I think we right at 5 o'clock. So I think timing is perfect. Like I would like to stop here, and I will share some of the. So we already know our website. We already share the Facebook group, And we also already tell everyone back testing is the key. We want everyone to practice, practice, practice before you, because you need confidence to trade. Without confidence, you make mistakes. With confidence, you make less and less mistakes. And we have fortunately, we also have partners. My English is not good enough, but Craig is my partner. He's excellent. He is the marketing person, and he can do all kinds of presentations. He will host some real courses down the road. And we want to hear is what people, first we want to hear the questions, and I do have a poll I want to ask everyone to to see what should we focus on next, and just let us know what you think, what we should do, and let us know. In the meantime, I'll take questions. Please ask me questions, and I'll try to address using the next half an hour, 1 hour. We can address them. Okay, I see some of the very nice questions from Michael. Yeah, I'll address them. I'll give 15 seconds for the poll to be stopped. Great. Yeah. So let's talk about those questions. So first question is is this webinar recorded? Yes. This time I definitely. Last time I forgot. So this time I recorded. And now the second question is why do you short during the bounce? So the bounce is actually on the short time frame, not on the big time frame. So we always follow a philosophy that short time frame has to respect the big time frame. So let's think about the concept we are talking about here. We assume we have a trending situation in a 20-day period. So let's say on the day chart, you see 20 days of a uptrend. Now, what happened in those 20 days? If you go to our chart, hour by hour or 4-hour chart, it doesn't really, in those 20 days on 4-hour chart, is always go up, right? It's impossible. So the correct thinking should be on 4-hour chart, if it behaves differently or reverse than my bigger daily chart, that's time give me opportunity to short along with the daily trend. So this is the profit level, because people, if you think the 4-hour chart actually also reverse, that has to be at the end of the trend on the daily chart, right? So on the 20 days, it only reverses at the end. Or if you think about Euro versus USD or Japanese yen, pound versus Japanese yen, sometimes the trending situation can happen month. So among those whole 3 months, 4 months time period, what do you really do? Do you want to keep looking for top and the bottom against the trend? No, I don't want to do that. I want to be on the safer side, On the 4-hour, I'm looking for reverse pattern. Any reverse pattern give me an opportunity to attack. And any of those attack, even though maybe some positions are not good enough, but at the end of the 3 months, as long as you trade along with the direction of the trend, you are safe. You will make money at the end, because you will see we have a clear way of detect when the trend will finish, when the weakness will come. And that's the time you close all your trade. So now let's think about next is what is a 10-day moving average on daily or 4-hour? Yes, we actually making both. So we draw 10-day moving average on both daily chart and 4-hour chart. So on MT4, there is a way of doing that, and we actually shared all the MT4 indicators in our website. So if you go to the website, you go to the trading system guide. I think at the bottom, we have our indicator we just talked about today. We have Hacking Ashi smoothed. We have multiple time frame Ichimoku. We didn't talk about Ichimoku, but we can have another webinar talk about that next. We talk about Bollinger Bands, moving average, and the width of the Bollinger Band. So those indicators you can download and compile in your MT4 platform. And the next question is a very good one I want to address is, do we use stop losses? No, we do not use stop losses. The reason we do not use stop losses is it's against our philosophy, because what is stop losses? Stop losses means, again, you are chasing a trend. So think about the situation like this, right? You long, you buy euro at 1.3, and let's say euro didn't behave. It dropped down all the way to 1.2. If you set your stop loss at 1.2, what does that mean? It actually means you try to chase the trend all the way down and take your loss at the maximum it can be. What we really recommend is you wait for a bounce. You wait for the price. For example, you're buying, right? You're long, you're thinking it's going up, but the trend reversed. So where do you get out? You do not have to get out when it's all the way trending down. You also get out when price bounced. And when the price bounced on the 4-hour, then you get out, because that's a short entry you're having here. So you can long and you can short. And I want you to long and short at the same time to create a board game. I do not want you to take loss, because who knows what happened if you hit the stop loss and move back up. This happening actually very, very often. And there is a what they call scam or something in the broker, because they see you have a stop loss, they can hunt your stop loss. If you search the topic called stop loss hunting, you will see many people discussed it. I don't know if it's true or false. I don't know if people really do that or not. But if people see where your stop loss is, you basically tell people where you concede your game. I don't have to do that. To me, if I manage my risk properly, as I said last, I have 2 rules, right? Anytime I can enter my trade, or anytime I do not have to force myself to trade. So I'm allowing myself to wait for the price bounce, and I'm only trade when an entry signal comes up. So you do not close your short until a long entry came up. So that's the whole situation we try to talk about here. So Forex trading platform, Forex trading platform we want to recommend is called MT4. So there's multiple brokers offering MT4. The reason we use MT4 is allow you to programming. As you all probably know, my background is from IT, and I program a lot. I do code a lot of indicators and also customize indicators based on what we need. So what we do is, if you set up MT4 and use our indicator, you can set up the template exactly as I'll show you, exactly as like what I see here. So this is the exactly template how I trade. And you can see on a different training system how we do. So let's take a look at this, right? It's very obviously here. We already said on the top of the band at the 10-day moving average area, if you see a break, it's a short. When you short in this area. Okay, you never long in this area. You could be wrong, you could be right, doesn't matter. You just short in this area. And then now when it hit the bottom, because we're seeing it's not trending, it's actually ranging. So when it hit the bottom and start bounce back, you close your short. Maybe you close here, maybe you close here, maybe you close here, maybe you close here, doesn't matter. Or maybe you close here. As long as you hit the bottom and leave with the outside the bottom of the band, hit the bottom of the band, when you woke up, you see something, you get out. So you know where the long is, right? The long will stay at the band, bottom of the band. The short is at the top of the band. So in trading, there's always people always say buy low, sell high. This is always true because price action, as I said, indicator doesn't make you money, but price makes you money. Price difference is the key to make money. So if you sell high, buy low is always correct. You never sell low, buy high. That's just ridiculous, right? And that's why I always tell people you never chase anything. Do not chase. Just wait. Be patient enough to wait. And eventually you will see you have much better opportunity to enter the trade. And people got panicking for no reason. I mean, sometimes people have few thousand, like few $10,000 or $20,000 in the account, and they have enough margin to cover everything. And then suddenly they say, "Oh, I have to cover here, take a loss." But I say, why? Why would you do that? Just wait. But people say, well, what if the price doesn't come back? I mean, yeah, maybe it's possible, but think about this: if euro versus, like, let's do a math, right? Think about how much margin you have left in your account. And when you force the bank will call you, say it's a margin call. Probably euro have to crash like 3,000 points in next hour or 2 hours. Will that happen? Maybe. But even that happened, you have other technique. You don't have to trade on the euro side. You can go to another pair, try to hedge it on the other pair, which give you profit. And then that profit will be larger than the loss you have. Because if the euro really crashed to 3,000 points, and you probably can make lots of money on the euro versus Australian dollar, euro versus Japanese yen. You can hedge in a different way of just chasing a simple trend. And most mistake I saw when the beginner or new traders enter the market is they always chase a trend, and they were hit hard by the market from both ends. So every time they short at the bottom, market reversed. Every time they chase the trend again to buy at the top, market reversed. So it's all reversed. And what I try to introduce the concept here is you never cut loss. You only enter. All you see is an entry point where the short players will do, where the long players will do. You join them. You are not the one to make decisions, right? You draw areas in any of the chart. You just think about it. Where are the players? Where those professional players are? Are they going to short here? Of course not. It's already at the end of the trend. Or maybe it will go trending more. But why? Even if it's trending more, how much profit you actually have? Very little. So why take a risk there, right? Why not just wait into the bounce and enter at the top? So that's what the whole philosophy we try to teach. So I recommend everyone try the app and send us feedbacks, and also join our Facebook group, and we can definitely discuss what's next and how do we trade together, how we help each other, what the course correct should host to help each other. So things like this, we can all be very interactive. Okay. Yeah. Any other questions? Because we're already 14 minutes over. If no more questions, yeah, I'll give a few minutes. If no more questions, I'll close the call here. And I would thank everyone joining me today. And we can continue talking Facebook or in Facebook group, or using the feedback email and the chat with each other. Okay. Thank you everyone for joining. Thanks for your time, and we'll see you next time.